Does this point out that are we looking at the trough in earnings, and have we actually seen that in the numbers that have come out so far?
So it's a little early to say. It's early days in the earnings season, but in general, the guidance that we're seeing is pretty decent. We're seeing some improvement. The commentary that we're hearing from companies is that things were pretty bad in January, February, but we're starting to see an upturn in March. And so overall, I think we're seeing a stabilization of the earnings guidance cuts that we've seen before, and that's a positive sign for what's a forward-looking market.
So if it's going to turn around, we always knew first quarter was going to be weak in earnings. That's not a surprise. If it's going to turn around, if it's going to come back stronger in the second half, why? Is that comparisons on taxes? Is that increased demand? What is that?
I think it's really a stabilization in global growth, right? We had a big downturn or deceleration in global growth the end of last year and coming into this year. Now you have the China stimulus. Now we have Europe slowly stabilizing as well, and the U.S. economy looks a little bit better than it did. So as the economy improves, then the earnings picture should improve as well. Is
Europe stabilizing? I mean, that's news. Let's go with that. Is that right? I mean, the PMIs we got overnight were not that encouraging.
Yeah, it's to be frank, we were a little bit disappointed with the European PMIs. We would like to be seeing the kind of rebound that we are seeing in China and emerging Asia. We still think it is going to come, but you do have some lingering political uncertainties. You have Brexit and Italy and France. And so if you're looking for some positive signs within the PMIs, Germany manufacturing, which has been the weak point, actually showed a little bit of a bounce. So that is positive for us, and we do think that with a lead, those China PMIs are going to ultimately lead to an improvement in
It's
Europe.
A bounce, but it's contracting. It's below 50.
It's below 50, yeah. So that's what the story is now. It's only about stabilization in Europe right now before we can see some kind of genuine upturn.
What about the story in terms of margins? And the conversation coming into earnings, if you come inside the Bloomberg, you can see margin estimates, was that you're going to wind up having compressed margins, you have higher wages, not being able to pass on any kind of pricing power. We learned from Nestle that you do have pricing power here in North America. What have we learned on margins so far?
Yeah, so on margins so far, I think generally, like you said, it's company specific, and we're looking very carefully at what sectors are showing more pricing power and more margin compression. I think in general, we don't see wage growth rising fast enough that we think there's a blinking red light that we're seeing significant margin contraction. But the trend is certainly in the direction of rising cost pressures, and so that's something that we're going to have to keep an eye on over the course of the year.